Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hello, good morning.
Welcome, everyone, to the Canadian Real Estate Investing Morning Show. Sorry, I had a thought. I just right when I was starting the show, I had a thought, and I was like, shoot, should I write this down? Thank you guys so much for joining us. We have a very special show for you guys today. Special guest.
Yes.
Investor-focused accountant Steve Tsonev from Finngo Bookkeeping Tax is on the show today, and we're going to be talking all about how to deduct your vehicle expenses for your real estate investing business.
Yes. I think that this is a question that a lot of people get confused about because there's like different things if you're doing it different ways.
Yeah.
And so I'm excited to clear this up. I also, to me, taxes aren't exciting. They're stressful, but I like gaining clarity. Right. And I think that that's what the people want as well, is just clarity around it. And these little discussions that we can have can really help just like bring people's stress down and be like, okay, I know what I got to do. Thank you.
Yeah. Sometimes we go, especially on episodes this week, we're very much about like the numbers and you got to do this. And this is the best time, the best opportunity that we've ever had in the last 25 years. You got to do it. And you're like, okay, cool. I believe you. But what about all the other shit? Right? What about all the other stuff we got to learn about and figure out? Like, how does this even work? Should I be writing down my where I go? And I heard that you can deduct your vehicle expenses. So how do I go about doing this? How do I go about doing this? Like, and setting things up properly. And it could be a little overwhelming. And this is just one piece of the very, very big puzzle. Yeah. And so that's why we've got Steve on today. That's why Steve Tsonev is going to be sharing this with you. And like Gabby said, we're going to hopefully give you that clarity. So there's just one less thing that you have to worry about, right? And that's what the Canadian Real Estate Investing Morning Show is all about. And this is why you should be listening every single day, okay? Every single day. And I've said this for years. If you listen to the show every single day for a year, you're going to learn everything you need to know about real estate investing. We do not skip anything. And though this show is very much not, we don't schedule things out. We don't, plan topics like a lot of episodes, except for today. A lot of episodes we don't even know what we're going to talk about before we start the show. We just kind of wing it and we go with the flow and whatever you guys want to talk about. But what you're going to notice is that there's some seasonality behind a lot of the topics. Whereas like, we talk a lot about water and flooding and insurance around this time of year because this is typically when we get the most water. We'll talk a lot about, finding tenants around this time of year as well because this is the most popular time when all the leases are ending, and that's when there's a lot of turnover, and that's when you're typically the busiest with finding tenants. During the winter months, we'll be talking a lot about how it's difficult to find really good deals, but there's not a whole lot of competition. There's a lot of seasonality around this because different times of year, there are different types of topics that are top of mind. And so if you continue to keep listening to the show every day, you will learn everything you need to know about real estate investing. You just got to be patient, right?
Yes.
And just every day making sure you're not missing a day. You're showing up to class. You got your notebook. You got your pen and paper, and you're ready to take notes. Okay? Yeah. And the cool thing is if you didn't take very good notes, hey, it's okay. It's recorded.
Yeah.
You can always go back. There's over 1,200 episodes, and that is over 1,200 hours of free education. This is by far, if the world ends and you had a hard drive with all of these episodes, this is like hundreds of years from now, thousands of years from now, this is like the perfect encyclopedia. This is like the library at Alexandria. You know what I mean? This will go down as the perfect library of everything you need to know about real estate investing. It's all here. It's all for free. You don't have to pay a penny.
Look, this is how they invested in real estate in the 2000s.
In the year 2000.
I love it. But it's true. And if you are interested in a specific topic and you're like, I wish they would talk about this, good chance we already have. And you can do a search in whatever platform you're using to listen to the podcast.
Spotify has the best searchability. If you go to Spotify, click on the show, and then go to search, you can literally search by keyword, and like anything and everything you can think about is there.
But if for whatever reason it doesn't pop up and you happen to stumble upon something we've never talked about, first of all, congratulations. That's going to be hard to do.
Yeah.
But also come join us live and ask the question, or email us and tell us what it is you're wanting to know and needing to know, and we will cover it.
Absolutely.
Yeah.
We got you covered.
We got your back.
Except that, so, we said like every day, but today's what, Friday?
Yes.
Yeah.
Happy
and
Friday.
Then, it'd be Friday. And then on Monday, it'll be Monday.
Yeah.
But then
Monday.
on Tuesday, we're not going to be here. Or Wednesday, Thursday, Friday, and the following Monday, Tuesday. We're going to take a week off, if that's okay.
Yes.
And I know how this really messes up a lot of your routines. I know that a lot of you guys look forward to this. You build your morning around this, and we appreciate it, and we love it, and we love having you. However, we got to take a break every now and then because we do this every morning, every weekday morning. And we also have lives, and we have businesses that keep us really busy, and it's really important for us to recharge every now and then. And so next week is Gabby's birthday, and we thought it'd be a really good time to recharge, and we're going to take some time off. We're going to go on vacation, and but we'll be back. So there will be no show on Tuesday, the 30th.
Tuesday to Tuesday.
There'll be no show on Tuesday through Tuesday. So we'll be back on Wednesday, July 8th.
Yes.
But don't worry, we're going to come back, and we're going to come back better than ever. I hope.
Hopefully with nice suntans.
Exactly. But here's
We'll
what I'm going to
good.
do for you guys. I'm going to be re-releasing some of our best episodes. So I'm going to go into the vault, and I'm going to look through those 1,200 plus episodes. And I'm going to find some of the best episodes that we've ever done. And we're going to release them on Spotify and Apple Podcasts so that you don't have to miss out. You're not going to be able to see us, but we're going to go old school. We're going to go back to AM, FM. We're going to go back to the audio, and I'm going to re-release some of our best episodes that you get to re-listen to and see, maybe how good were they before? How good were they back in 2022, 2023, maybe, or even 2021, right?
I just have this sneaking suspicion that you're going to try to embarrass me. That you're
why?
Every year you're like, ooh, guess what memory just popped up? The one where Gabby took her multivitamins before she ate and she threw up on the podcast.
Yeah.
I feel like you're going to dig up some embarrassing moments.
Trust me, there's more embarrassing moments for me than there are for you. I can guarantee that, Gabrielle.
Okay.
Sorry, I gotta rate
Well,
this
make
one.
sure there's balance. If you're going to embarrass me, embarrass yourself too, okay?
Yeah, I'll do my best to find the
Okay.
most embarrassing moments. But there's some really great podcasts there, where we had some really, really great moments. And some of those moments are very impactful, which I know can be very helpful for our listeners. And it's tough to recreate some of those moments. So I'm really looking forward to sharing those with you guys. And you guys should, I want to hear your feedback on what you thought about those episodes. There are some people that have been listening since day one. And for that, it'd be a nice trip down memory lane. And for others who are just kind of new to the show, it gives you an opportunity to hear some of the older coaching. And I'm going to try.
Probably going to sound very similar.
It probably will, yeah. Nothing's really changed as far as our coaching, goes and the way that we teach. However, it'll be fun for you guys to kind of hear some of the opportunities that were available before that are no longer available anymore. And I hope that kind of inspires you guys to really take advantage of the opportunities that are right in front of you, the unique opportunities that you have right now, just because you'll understand that, these too shall pass.
Yes.
And it's hard to find the next big opportunity, right? So if you got one right in front of you, take advantage of it. All right. Okay. Today, like I said, is Friday.
Yeah. Rebecca Black going on in everybody's heads.
Today we're taking possession of a property.
Yes, we
We
are
are taking possession of a new property today.
Yeah, I feel like we've been waiting forever for this day to come. I don't know why, but it's taken a long time. But we are here. We take possession of a new property today. Super exciting.
I thought we were taking possession of 2 properties today.
I know you keep saying that. You keep driving me crazy.
I'm messing my dates up because I thought today was June 29th. But June 29th is on Monday? I don't know. I got my days all mixed up.
Yeah. Well, no, I know why you're mixed up. Okay. Do you guys, your realtors, tell me this. Do they invite you to calendar invites for like condition removal day, possession day? Like, I love this because we get an invitation, we hit accept, and it goes directly into our Google Calendar. And so we can see exactly like when deadlines are coming up and
I don't think you really explained that thoroughly. If you can start from the beginning.
Okay. What do you mean I didn't?
You said, do your realtor send you? Can you just explain that a little bit better?
Okay. So when we, put an offer in on purchasing a property, our realtor sends us a calendar invite for the day that we have selected as condition removal.
Okay.
So the date where we need to satisfy all conditions and either remove them or back out of the deal.
Not just that notification, but other notifications as well.
Yes, but that's the first one. So that invite goes into the calendar and we have a condition removal date. And then we also get a calendar invite Okay, so I'm just going to slow it down. So once that date comes and we remove conditions, which we had that nice little reminder in the calendar, then we get another invite. We get an invite for possession day,
right? Which
is exciting. So then we accept that one, goes into our calendar, and we have like that address and possession day in the calendar, and it's super exciting and fancy. I love it. I think it's awesome.
It's a big shout out to Calvin Realty for implementing that.
Yeah, they haven't always done it. It's amazing.
And I love it so much is because it just saves me having to do it myself, because you can imagine all the offers. We write a lot of offers.
Yes.
And when you write as many offers as you do, like you're doing DocuSigns and things like that. Sometimes your joint venture partner's doing DocuSigns and things like that. And so once you finally do get it accepted, you got to go hunt down that DocuSign document, find it, scroll through, find the possession date, scroll through, find the conditions date. Okay, write that down. Then you got to write the address, which in Edmonton, all the addresses are like 27 digits long. It's like 237-57309, 137th Street Northwest. You know what I mean? It's really hard. And you're like, okay, what was it again? It was.
And I feel like I was always saying, Wayne, when are we removing conditions? Wayne, when's possession on this one property?
Because I would never put it in the calendar because it was a huge pain in the ass. It'd take me 20 minutes just to get the calendar notification in there, and God forbid I put one digit wrong or the wrong date.
Yeah.
So I really do appreciate the fact that our realtor went out of their way to add that system in where they do it for us, and and it automatically goes into my calendar. I'm like, it's so amazing.
But why I brought that up is because why you keep getting mixed up thinking that we're taking possession of multiple properties today is because we're also removing conditions on another property today.
Yes.
So yes.
So what's the other property?
The other properties are next week.
Oh, we have more properties next week.
Yeah.
Okay.
Yeah. Okay. So, you do need to pay attention whether it's condition removal or possession day when you're looking at the calendar. But we can handle that, right?
I don't know if we can handle taking possession of all these properties while we're away, though.
We can. We have a team on the ground. Yes, we can. Yeah. So, we're all lined up. Everything's in order. I'm organized because this has been one of the most chaotic weeks for me, like, in a long time. I'm having a very tough week to get through. So I know that next week needs to be like rock solid, like everything in line, nothing missed, because yes, we are taking off and we have lots going on next week while we're away. Yeah.
And then in regard to the property we got to remove conditions on today, some hiccups with financing. Yeah. And some hiccups with the inspection report. I gotta deal with that today. Actually, that's on my list for today. There's always a small little laundry list of repairs that need to be done on every property you purchase, and I always expect anywhere from $2,000 to $3,000, just like when you take possession of a property, for cleaning, small repairs, that kind of stuff, getting it ready. Yeah. This one's just got it's probably got about $5,000 worth of repairs, which is a little bit more than we normally do. So total is probably going to be about $6,000 or $7,000 when we take possession. And I'm hoping that I can get the seller to cover some of that, but because of the financing hiccup, I'm losing leverage. I lost my leverage.
Yeah.
And it's hard to ask for a financing extension and $7,000 off the price or $10,000 off the price. So I lost my leverage, and I'm trying to figure out how to go about doing that. And so literally today, once the show is over, I got to go through all my emails and respond to all of my messages. But then that's what I'm going to be dealing with today, and hopefully getting that all resolved, and then hopefully come up with a plan of attack for how we're going to figure this out. I really don't want to lose out on this property. I also don't want to have to swallow that, eat that cost.
I had an idea that I'll discuss with you after the show. I'm writing it down. A very good idea to get what we need.
Does it involve me taking my pants off?
No, it does not involve you taking your pants off.
Okay.
What? Do you want to discuss right now?
No, I'm just looking. I'm typically,
I don't want to forget, because I feel like I might have just saved our deal.
I'm typically the person who comes up with strategy and problem solving. So that was quite the note you wrote over there. I can't see it, but I'm really excited to hear about that afterwards. Okay, yeah. So possession of new property today. Do I got to go down there today, or can this be something I deal with tomorrow?
Yeah, no, don't need to go down today. We got it all taken care of.
Lockbox on site.
Lockbox is on site.
Who's getting our gift, our realtor gift? We didn't come up with a plan for that yet on how we're gonna handle that.
I think Chris is expecting it. So
Chris is we're gonna send the donuts to Chris. I told Calvin that we were talking about him on the show, and I'm interested to see what he thinks about that. Okay, so that's what we got going on here. You guys are aware, no show on Tuesday, all the way through to the following Tuesday. The show will be back on there'll be a show on Monday.
Yes, we will see you guys on Monday. Yeah.
But after that, we'll be gone until July 8th. You guys are aware of that. You guys are aware that that we're buying properties. Okay, that's important information, I guess. And what else was there? There was something else I was going to write down, but okay, I guess that's it. All right, so we got our special guest on the show today, Steve Tsonev from Finngo Bookkeeping Tax. We're going to be talking all about how to deduct your vehicle expenses for your real estate investing business. We're going to dive right into that when we come back from the break.
Real estate investors need to treat debt differently than homeowners, and at Kirkland & Brennan Mortgage Group, we understand that. For the last 11 years, we've helped real estate investors plan and build their portfolios. We understand how to help you avoid fees, penalties, getting yourself stuck, and making sure that the deal you're doing today doesn't stop the deal you want to do tomorrow. You can reach out to Keaton, Keaton, at kbmortgages.ca. Put plan on the subject line, and we'll help you build a plan and then realize it for your real estate goals. We also coordinate with the other professionals like your accountant, lawyer, realtor, and we will help you build your portfolio. So reach out. We'll do our best to help. Thanks, guys.
You've got showings, lease signings, suite renos, condo board meetings, credit checks, mortgage financing, and every so often a tenant clogs the sink because they shoved macaroni down there. Stop. Breathe. Leave the bookkeeping to Finngo. Finngo is specialized real estate bookkeeping by real estate investors with tailored services for maximum returns. Save time. Enhance your returns. Claim the plumbing repair for that ridiculous macaroni fiasco. Book your free consultation at Finngo.com.
Summer. While everyone's getting distracted, this is when the market gets quiet. Not because the opportunities disappear, but because the people do. Vacations, long weekends, these are the distractions I'm talking about. And that's exactly when serious investors make their moves. At Calvin Realty, this is one of our favorite windows. Less competition, more flexibility, and sellers who are actually open to negotiating. While everyone else is stepping away, we're stepping in. If you're looking to buy right, not just buy fast, this is your edge. Calvin Realty. Opportunity doesn't take time off.
Hey, Steve, how's it going?
Hello.
Good morning.
It's good to see you
I
too.
love this new format.
Do you? Do you like it?
Yes, it's great because not only I get to hear you, but I also get to see you, which is amazing.
Mm-hmm.
I know it does feel like a little upgrade from the Podbean, right?
Certainly. Yes, it's always good to move up in the world, right? Like keep adding new things to it.
Absolutely. So, Steve, this morning I overheard Wayne asking you how your trip was going. Where are you? Where in the world are you? What are you doing? What are you up to?
I am visiting family in British Columbia. So I've just been enjoying some really nice and sunny weather for the last few days, although it is starting to turn a bit more into rain. I know Edmonton had a lot of rain, so it was a good break to get at least 3 days of sunshine.
Yes, yeah, we've been enjoying that sunshine over here as well, but it is ending indeed over here as well. And it looks like a whole bunch more rain coming this weekend. Gives me a bit of anxiety, but we'll see how it goes.
I know what you're talking about. I think my feed was full of this basement has flooded and this roof is leaking. And
Yes.
yes, there's a lot of that going on during rainy season.
Yeah.
Literally just got an email from a tenant right now. That's what I was glancing over at,
Yeah.
and it's been very stressful and difficult for ourselves and also for many real estate investors with all this weather. Happy to hear that you haven't been dealing with anything yourself.
No, not for that purpose. I am dealing with something else on one of my investment properties where the builder next door excavated really close to the property line, so a lot of my dirt has collapsed into their excavation side. So that is kind of related to a bit of water and all that, but going through insurance, dealing with it, it's not difficult. It's just that sometimes when you want to explain something that's outside of the box, it's really difficult for others to understand it.
Mm-hmm. Yeah.
Absolutely. Oh man, sorry to hear that. That's always tough. I remember we had lots of problems with a new build happening beside one of our rental properties. And yeah, like damaging the fence, collapsing soil, like all kinds of stuff. It was just
Yep.
like one thing after another, after another, after another. I remember their chimney collapsed or something when they were
Oh yeah.
demoing and like
Oh, wow.
smashed our fence in and like, oh, just so much. But we
Yeah.
get through it, right?
That's
Yeah.
right.
Yeah. I love how I completely forgot about that.
Yeah.
About the chimney that came down and broke our fence.
Yeah.
But that's anyways. Well, I'm glad to hear that you're enjoying your trip, and really happy that you could join us today on today's show. For those of you guys that don't know, Steve Tsonev is one of the partners at Finngo Bookkeeping Tax, Canada's top investor-focused accounting firms, providing services for real estate investors and business owners all across Canada. For those that don't know you, Steve, how about you share a little bit about you, something that something that we don't know.
Sure. I mean, something that you don't know, you probably know a lot of things already. I would say something that is unique about our firm is that we are very clear about what our niche is. And that's not only that we've picked, oh, I want to focus on real estate investors and that's it. Like we just talked about, I'm an investor myself. So I've gone through a lot of the things that others have as well. And I need to find interesting ways to deal with them. So I understand the problems, I understand the frustrations, and pretty much we try and make the easiest and smoothest way to deal with those. We are busy, you're doing so many things. So we just got to figure out a way to simplify it.
Yeah, yeah.
Definitely.
And for those of you guys that don't know, for many years there, I was really bothered by the fact that there wasn't a really great, reliable, in my opinion at least, investor focused accounting firm in Canada. And it was one of those things that was just a problem that I couldn't seem to solve. I couldn't seem to resolve. I couldn't find the right people. And, recommendations, trying to get a recommendation for an accounting firm in Canada that, services that can help real estate investors was next to impossible. And that's why I sought out and tried to find and build, the best one, that we could possibly make. And, my associations and my partnerships are very, very, very considerate. I put a lot of thought into it. And anytime I put my name on something, anytime you see someone on this podcast, I want you guys to know that a lot more thought and consideration has gone into it than just like having someone on a podcast. I know I get lots of people asking to be on the podcast, and there's a reason why we keep such a small, tight circle, is because we want to make sure that anyone that we recommend, anyone we put our name next to, is someone or something that you guys can actually trust. Trust is really important for us, especially in this industry. So when I say this, I mean it, that, Steve is the best in the industry. Steve is the best in Canada, and he's also an investor himself. So rest assured that, if you're looking for accounting services, bookkeeping services, whether you're a realtor, whether you're a real estate investor, a business owner, or you're just looking to do your personal income taxes, like, Finngo is the best, and Steve is the best.
I will say that as business people, we also align really well because we want to do better. We want to improve our systems. We love systems and we love to create things that are not just stagnant, like you just said it and forget it. No, it's like industry changes. We got to stay up to date. We have to keep adding to our offerings, keep adding to our technology, keep adding to our employee knowledge. And those are super important things. So, by being exposed in that ecosystem of real estate, things do change even within that. So, having someone that day to day understands it really comes a long way and it helps.
Absolutely.
Yeah.
Absolutely. So as real estate investors, obviously, we do travel quite a bit. We have to,
Yes.
pick up supplies. We have to go to our rental properties to do viewings. We have to drop off consumables, filters. We have to go and take care of small repairs and things like that. There's a lot of traveling that we have to do. And, as a business, because real estate investments, real estate investing business, it is a business. As a business, that does entitle us to certain deductions as per the Canada tax code. And that's why I wanted to have you on today to talk a little bit more about the traveling to the properties, and specifically talking about deducting expenses for our vehicle, the use of our personal vehicle. And I'm excited to get into this because, I'm not going to lie, I understand it generally speaking, but I do not claim to be the top expert when it comes to deductions and taxes for real estate investing. It's not my area of expertise. And I'm really excited to have you on here today to talk about this because it is a little bit complicated, right? It really does depend on what type of business, how big your business is, and how you structure things in order to get the best optimization for your deductions. And I'm curious, where would you like to start off on the topic of vehicle expenses and deductions?
I think we should probably start with the most basic and then start building on top of it. Of course, there's going to be a lot of people who only have a single rental property, and there are some very specific rules around that. It's one of the areas that CRA has provided the most guidance. They are relatively dramatic, I would say, about the limitations that they impose on you for having a single rental property. But in those types of setups where you just have one property, how much driving do you really need to do? Technically, it's not that much. Certainly, there would be some situations, but let's go through them and just sort of know that basic starting point, and then we can start adding to that.
Yeah.
So, whenever you have a single property, you are allowed to deduct vehicle expenses, but you have to meet three conditions. One of them is that you receive income from the property and it is in the general area where you live. So let's say you live in Edmonton and your property is maybe in Edmonton, maybe St. Albert, maybe Leduc, something like that.
Mhm.
It's not a property where you live in Edmonton and then the property is located in Calgary. That's generally not something that you would be able, or it would not meet that condition.
Right.
The second condition would be that you personally do part or all of a specific necessary repair or some type of maintenance in the property. So you gave the example of the furnace filter, for example. That would be a maintenance item, and you would maybe need to go in and change it. Or there was a leaky faucet and you feel comfortable with the plumbing and you would like to fix that yourself, that would meet the second condition. And then the third one is that you're using the vehicle to bring with you the tools and materials to perform that task. So, in the example of the plumbing, you would be bringing some plumbing tools and maybe the hoses and whatever materials you need, or the furnace filters that you're replacing. Just driving to the property for a showing when you only have a single one would not qualify you for the automobile expense. Or, for example, if you're just going to get a signature on your lease or on a renewal, m- in the situation where you're giving notices, eviction notices, rent increase notices, all those types of things, it would not really qualify based on those rules that we have.
Okay.
Okay.
So
I
those are the three things.
so is the I'm just trying to, like, my brain's just going and I'm trying to think, like, how do you
Mhm.
really prove that? But I guess there would be receipts to go along with, like, say if it was a repair, like in the example that you gave, you had to pick up supplies to perform the task that you were there to do. Is that kind of where, like, the proof aspect of it would come in if it ever came into question?
I would say yes, but I would also say that because it's so limited, it is expected that the amount of deductions you have would be very small. Because the
Right.
reality is, maybe you'll go 4 or 5 times in the year,
Right.
maximum, I
Yeah.
would say. So overall, we're going to see a very small deduction on the return.
Sure.
If you do have a single property and you're claiming thousands of dollars of deductions for
Yeah.
automobile, that would be something that will be questioned. And that's when, I don't want to say a red flag, but maybe a yellow
Yeah.
flag.
Yeah.
So let's look into it. What kind of logs do you have? What information do you have? And maybe your property had some major damage. It is possible that you
Yeah.
did have a single property and there was some flooding because of weather or something
Mm-hmm.
like that. And you are pretty handy and you're able to do that. Well, then guess what? You can justify it. You'll have that information. You'll probably have some type of insurance claim or something to go along with it. Probably lots of photos of what actually happened,
Right.
purchases of new materials, as you said, things like that.
Hmm.
That would be the proof. But of course, very important, no matter what we talk about today, some type of log. We need to be tracking those kilometers or like what are we actually doing in terms of vehicle expenses.
Okay.
Mm-hmm.
This is new to me. I didn't know that specifically about just owning one property, that we couldn't be looking at, doing inspections or viewings or those types of things. So this was something new for Gabby.
Well, it's probably been a long time since you just had a single property
Well,
that
that's
you're
true.
responsible for. Yeah.
That's true.
Yeah. Yeah, it's true. Um, and so that's talking about one property, but like, what if you had more than one property? Like, what if you had two? Does it change things dramatically?
Yes. So when we start adding two or more properties, the same conditions apply. All like so, you're still able to deduct all the things about repairs and maintenance and tools and all that kind of stuff. But there are some additional situations. So in that setup, you could also make deductions if you're going to the property for collecting rents or for supervising repairs.
Okay.
Supervising repairs is important because quite often, as you know, we hire trades and they're kind of doing a good job, but you kind of need to go there and make sure that they're doing it to your standard and how you want to set it
Mm-hmm.
up in the property. You might not be the best electrician, you might not be the best plumber, but you can provide guidance of how you want it to run through the property, etc. So now when you have more than one properties, you driving to it and supervising those repairs and providing guidance to your trades does qualify, which can be quite significant.
Okay.
Okay.
And
And then we also have the last spot point, which is managing the property. So there can be showings, there can be
Okay.
dealing with signing contracts, renewals, etc.
Okay.
you mentioned picking up rent. Do you think CRA is that stupid? Like, when's the last time someone picked up cash for rent?
Well, It could be a small
Don't answer that
town. It
question, by
could
the way.
be. It could
Do
be.
you think CRA is
Don't
that
try to
stupid?
defend them. No, just kidding.
I will say that it is not impossible. Like cash is still money. So if somebody offers me cash, I will take it if they're not giving me anything else.
Right.
So it's fine.
But you are still entitled to, is what you're saying, if it was the
Exactly.
case.
Yes.
Um,
Collecting rents, if you think about it, there could be other things that encompass that. And potentially you could have the argument of serving notices, like your 14-day eviction notices.
Mhm.
It could be connected to the notices for rent increases, signatures, updates, someone being added, all those things can actually add up.
Okay. So it's interesting that it's just that distinction from one property to two properties like unlocks this whole, it's like now basically
That's
anything
right.
you need to go to the property for because you're managing it qualifies. So it's interesting. Sometimes I wish that we could just be, like a fly on a wall to see like what these conversations, like how this transpired. It's like you have one property, no, 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 no. You
Yeah.
can go and repair and claim that mileage, but two, you go for it. It's like how did
I
that
think
conversation go?
I think the thought process behind it is that in a business or as an individual that has a regular day-to-day job, you kind of need to commute to the workplace,
Right.
and that is non-deductible. So when you have a single property, just going to that business place and back technically should be non-deductible. But at the same time, they understand that it is a more frequent requirement to go and to deal with those extras that the business has
Yeah.
some problems that have to be dealt with. So they're trying to find a way to assist with that.
Hmm.
I will say though that one again, there's some additional things that when you have two properties, you obviously have more reasons for it, but it also allows you to expand the geographic area a little bit. So it doesn't need to be in the immediate area where you live. It can be further,
okay.
but it is important that you're driving between two different sites. So the concept of driving from home to a specific location, the commute part,
Yeah.
still is something that they don't really like to see deducted.
Hmm. I you know, I speak to a lot of real estate investors, and they're always asking similar questions like this. And my automatic default answer is always just talk to your accountant. Just talk to your accountant, please. You shouldn't be asking. I see too many people asking online, asking their coaches. The person to speak to is Steve. You know what I mean? You call up Finngo and you get your answers from a legitimate source. But, one thing that I always do say to investors is that when they ask, like, hey, can I do this? Or, hey, do you think CRA would mind about this? How do I prove this? My stance has always been, or my answer has always been, if it's a legitimate expense, if it's a legitimate thing that you are entitled to deduct, then you don't it's not like, oh, do I have to prove this? If it's legitimate, then just claim it. You know what I mean? And as long as it's legitimate and you have proof for it, you've got documentation showing, hey, this happened and I needed to go here to do this, or this happened and I had to serve this notice, then you shouldn't have anything to worry about, right? As long as it's
That's right.
legitimate.
Yeah.
But
And what's the worst that can happen is that it comes into question and they say, no, you can't do that. And then it
What?
doesn't,
Yeah.
just gets taken off, right?
That's right. You would be taxed on the portion that you didn't pay. So let's say a deduction of $200 wasn't accepted, then it would be $200 of extra income and whatever the tax
Yeah.
is on
Yeah.
that.
Yeah. I think it's when people start asking like weird questions like, hey, do you think I can deduct this? Right. It's when people are trying to like get away with stuff is typically when I'm like, was it a legitimate expense, or are you just trying to claim half of your vehicle expenses? You know what I mean? And just trying to commit tax fraud. If these are legitimate expenses for your business, then you shouldn't have anything to worry about.
That's right.
Right.
Well, I do see a question in the comments, which I think
Okay.
is very fitting to what you're describing now. Like somebody is asking if a duplex would be considered two properties.
Oh, that's a
And
good
the answer
question.
is no. It is a single property. Like you don't need to drive between door A and door B there. They
Oh.
are like side by side to each other.
It's
So
one
uh,
location.
Of course, anyone can put whatever they want on their taxes. However, when the time comes to justify this, how are you actually going to justify it?
Is it legitimate?
It needs to be reasonable. And I would say a duplex is not reasonable. If it's down the street a little bit further, like maybe a block away or something, potentially. I mean, how much gas and how many kilometers are you actually going to be able to deduct from a kilometer? Maybe at that point it's not really worth it to be tracking it. Yes, I agree that every dollar that you deduct is great. It's better than nothing. But if it is like $5 that we get to deduct, maybe you just don't need to spend the extra time tracking it.
Yeah.
Right.
And so we talked about, owning one, owning two or more. What about for other types of real estate professionals that are doing a lot of traveling? The first thing that comes to mind would be something like a realtor, for example. A realtor
Yes.
it's a bit of a different business, obviously, because it's not a rental property and you're managing rental properties. This is more of an active business, right?
That's right. Yeah, like a realtor is a great example, or a property manager, someone that is really all day zooming around the city, visiting different properties and having to deal with things. In this situation, let's start with maybe the two types of ownership. Like you can have ownership of the vehicle yourself as an individual, or you could have it if you're set up as a corporation, as part of a corporation. Those are kind of like complicated to decide, and we could have an entire session just on that.
Yeah.
But to give you a very brief overview between the two, whenever you are owning the property or the not the property, the vehicle yourself, you can rent it almost in a way to your business and get reimbursed by the business because it is used legitimately for
Okay.
the business. The alternative is you have your business owning the vehicle, but quite often people will use it for personal reasons. Like they'll go to the grocery store, um, they'll go on a vacation somewhere, like on a trip. So then it is the other way around where the vehicle is renting it to the individual, which means that we need to deal and calculate what is the benefit of you receiving that vehicle and then issue a T4 slip for the benefit of having a corporate vehicle for personal reasons. So it starts to become really complicated and we tend to avoid it because there's a much simpler method. And that is you just track the kilometers and you get the allowance that CRA posts on their website, which is very generous, I would say. We're looking at almost 75 cents per kilometer. That's kind of an average. There's like two thresholds there. But at 75 cents per kilometer, a realtor would easily drive over 20,000 kilometers a year.
Yeah.
Yeah.
So imagine taking 20,000 kilometers, multiplying it by 70 cents, and being able to take that deduction without you having to track the gas receipts, the repairs and maintenance receipts, and all of those little other extras that go to maintain a vehicle.
Yeah.
So I would say it certainly can work in your favor if you just go the kilometer route. There's a lot of apps and software that can help you track it automatically these days. So you no longer need to, enter the car, pull up that paper log, type, like start writing all of the starting kilometers, ending kilometers, what was the reason of the trip. All that can be automated these days. And it works really well because you just click a button and then the report prints out. Some software out there will even do the calculation for you on how much you're allowed to deduct because they connect to the CRA website and they know the kilometer or the allowance that's permitted based on the threshold that you're at. So it is very simple and easy, and it avoids you having to worry about those special calculations around the personal benefit and then having to issue slips.
So you're saying for simplicity, it is a lot easier just to use your own vehicle, especially for real estate investors and realtors. Just to use your own
I would say
vehicle
so.
and keep track of your kilometers and then get reimbursed for, like you said, up to 75 cents per kilometer.
That sounds exactly right. I mean, there are some situations where you may want to purchase a vehicle that is only used for the business. You will have no personal use, and perhaps putting that through your business, through your corporation, will be fine. We don't need to do special calculations, but that's not the reality. Most of the time, you kind of end up using a regular passenger vehicle. Nothing like if it's an electrician and they have a specialized van, that's a different story. But an investor or a realtor, they tend to use their regular vehicles.
Yeah.
Yeah.
Yeah, and that makes sense, obviously. But like you gave one example there of an electrician, buying a van or perhaps a contractor getting a pickup. What circumstances does it make sense? In what cases does it make sense for you to purchase it? Can you think of any other special cases where it makes sense for someone to purchase specifically for their business or in their corporation?
I would say the deciding factor is there going to be personal use at all of this vehicle or not? If
Hmm.
the answer is no, then we could probably put it in the corporation and we can deal with the depreciation of it, capital cost allowance, etc., all those complicated things. If there is a personal component, for simplicity, keep it in your personal name and just get the reimbursement. It's so much easier to track
Right.
and makes the life of a busy investor easier. That's the reality.
Or a realtor in this case.
That's right. Yeah,
Right. I think realtors might be even busier than investors, just with the amount of, juggling that they do.
absolutely. It is maybe the kind of overarching theme here is it depends. Nobody likes to hear it depends,
I know.
but we've talked about a few scenarios, so some people can put themselves in one of these scenarios. But if you're not sure, talk to an accountant and find out my specific setup is like this. What makes sense? What should I do? And I do have those calls quite frequently. So we analyze it and we try to decide, hey, is it something that is worth tracking independently or not? Or are we just doing kilometers or are we doing a different method? Once you sit down and you have your own personal story, we can then give you the guidance that makes most sense for you.
Okay. And so I guess I'm just curious, and there's one last question that I have is that,
Yes.
what there's different ownership types. Obviously, you can own it in your personal name, you can own it in your corporation, and you can do, renting it to me or renting it to my corporation, whichever. But what benefits are there? Like, what benefits are there for owning in a corporation? Are there any?
I will say the benefits are always the same, regardless of how you own it, because you will either own it personally and get reimbursed by the corporation, or you will own it inside of the corporation and do the deductions there, but deal with a personal component. So ultimately, the benefit would be the same. There is also the two other kind of structures deciding between purchasing and financing a vehicle or leasing a vehicle. I
Okay.
hear that question quite often. Same answer. Like the actual deductions that you're entitled to are about the same. And if you're personally leasing a vehicle, the kilometer allowance doesn't change. You would still
Right.
be receiving the same benefit in the end. Usually what I recommend to my clients is go for what is least expensive for you. Get the vehicle that you want and pay out of pocket as little as you can. Then we will just get you the highest tax benefit that we can get you.
Okay. And is there any, if you were to be purchasing the vehicle specifically for the corporation, is there any specific types of vehicles you should be purchasing? Does CRA have any requirements for that if you were to be purchasing it through the corp specifically for the business? Do they want to see a certain type of vehicle applicable to your business?
That's a good question. There's not a type that they want to see, but there are certain caps in terms of what we're able to deduct. So, for example, if you purchase what they would describe as a luxury vehicle, example, a vehicle that costs $60,000, the maximum that we're able to depreciate to is around 38. It does change every year. So yes, you can purchase whatever you want. It's just that you wouldn't be able to get the deduction past the 38,000. So there is a cap. That cap does change every year. It's just that there is some type of cap that you need to be aware of.
Okay. Other than that, they don't have any real restrictions.
No, not really. No, I mean, if you really wanted to get a Lamborghini, you could, but is that efficient? Does that make sense for your business? Now
Right.
you're paying all that extra cash flow, all the maintenance around this expensive vehicle. It just doesn't make sense to be driving around and collecting your rent in cash with your Lamborghini.
Yeah, yeah, absolutely. And as you explained earlier, there's no real benefits from purchasing the property, or sorry, purchasing the vehicle, compared to just using your own personal vehicle in your own name.
That's right.
So it really is just for your own
Yes,
luxury.
and quite often the example I give is the kilometer allowance doesn't change and it is the same regardless if you have a junky $1,000 car or like a fancy Model S $100,000 Tesla. So, you can still get the same kilometer allowance. It's more about how comfortable do you feel paying the monthly payment on the 100K car or on the 1,001 that you just got with the cash you collected from your rent.
Right,
And how
right.
does that impact your ability to get more properties?
True,
Exactly.
true. Because
Yes.
you are servicing that if it's on a loan.
Yes.
That's a very good
Yeah.
point.
Okay, I have a couple questions,
Sure.
and there's a question in the chat here as well that I want to make sure that we get answered. First, I'm going to ask my question. I think it should be a pretty simple answer if I'm understanding correctly. But when we go back to personal ownership of the vehicle and just, you said in that instance we're tracking kilometers and claiming those kilometers. Is there a circumstance where you could own the vehicle personally and be able to claim vehicle expenses versus just tracking kilometers? Or is it just at that point, your only option is kilometers?
Oh, you can choose between both actually.
Okay.
So you don't have a limitation. What the tax code says is that you're entitled to claim reasonable expenses for earning the income that you earn.
Okay.
There is a method to calculate those reasonable expenses, and also CRA just comes out and tells us this is a reasonable allowance that you can get. So it is relatively straightforward.
Okay, so if I were to come to you and say, this is how many kilometers I've driven, but this is also, how much I've had in vehicle expenses over the year,
That's right.
which circumstance would get me the best benefit claim?
That's right. Yeah.
Yeah.
But
Okay.
to
It
be
almost
quite
always ends
frank
up
with you,
kilometers.
that's right. I would say like 99% of the time.
Okay.
Interesting.
Okay.
Interesting. I could see a realtor who does so much driving. You know what I mean?
Yeah.
It would make more sense to claim the gas, the oil changes, the vehicle repairs, the chip repair in the windshield, all of those other things. I would have assumed that would have been more than the 75 cents per kilometer.
You know what it is? With a with that method, we eventually reach a cap once you've depreciated the value of the vehicle,
Mm.
and your operating expenses are only so much. With the kilometer method, it is basically forever. So if you've had a single car that you bought in the year 2000 and now it's 2026 and you're still driving that car, if we were using CCA, that would have been long gone. We couldn't have that deduction anymore. But the kilometer allowance, we could still do it until now because it is just automatically what you're allowed to do.
Interesting.
Okay. Okay. So then, relevant to this is a question in the live chat here. And Carmen asks, are there any tracking apps that you would recommend? So we know that there's lots out there. Do you find any superior to others?
Yes, I can speak to three very quickly. One of them, which I usually recommend to investors because they don't have as many trips, is called Mile IQ. Mile IQ has a free tier that allows you to track up to 40 kilometers. It's just on the background of your phone. It tracks all of your trips and you just label them. This was personal, this was business, whatever. And then you click a button and it gives you the report. Very easy to use. And when you do pass the 40 trips, I think it's only $6 a month or something like that.
Okay.
Quite inexpensive. For anyone who has a more sophisticated business or like a busier business and is already using QuickBooks Online, the QuickBooks Online app does come with a mileage tracker as well. Same thing, it does it in the background of your phone and it tracks all your trips. You just label them, you can export them, and can take care of the deduction for you. The one little tip around it is that sometimes QuickBooks Online will update the app and log you out. So we usually suggest check in at least once a month and make sure that you're still logged in and the tracking is happening. You don't want 12 months to go by and then you realize it stopped tracking for you. And then we've also seen another platform that is quite popular in the accounting industry. It's the receipt tracking app called Deduct. It also has a mileage tracker functionality. The difference is that you actually need to click start and stop on it. So it does require that extra step. However, it can work really well in more rural areas where the maybe signal is not as great and the other apps that are supposed to track things automatically in the background cannot do it. So I have seen and recommended that to some clients who are a little more on northern parts of the country.
Okay. And sorry, what was the name of that one?
Dext.
Dext. Okay.
Yes.
I think, honestly, that today has proven for anyone that has ever said this or anyone has ever thought this, I think today has proven that you completing your taxes on your own through TurboTax or you going down to that green office building in the shopping center, what are the H&R Block, is not sufficient for the business that we are operating. We've learned so much today about vehicle expenses that I feel like so many people could have misstepped. You know what I mean? Yeah. And I personally went out of my way, and so did Gabby, to ask even deeper questions. It just to try and provide as much value for you guys as possible, things that you guys need to consider. And I honestly, it just goes to show and prove that having the right investor-focused accounting firm on your power team is so incredibly important to make sure that you are getting the most amount of deductions and paying the least amount of tax. You got to optimize this stuff, guys. And there's just so many things that could be misstepped. And ultimately, at the end of the day, it's just going to mean that you're going to be making much less profit.
Yes.
And the whole reason we get into this real estate investing, or the whole reason you get into becoming a realtor, is to make money, is to get high returns or to make money, to provide a better life for yourself and a better life for you and your family and a better future. So it's, I can't say this enough, thank you so much, Steve, for coming on today and providing all these insights and this expertise and for everyone. And if anyone is interested in adding Finngo to their power team, Steve, what's the best way for them to contact and to get set up?
I think the easiest for everyone would be just going on the website, which is this way, Finngo.com. Finngo.com, and there's lots of options and buttons that say schedule an appointment. I offer free discovery calls. It's a 15-minute chat just to see, are we the right fit and are we able to bring value to your business?
Perfect.
Love
Perfect.
it.
Again, thank you so much, man. We really appreciate it. Hope you have an awesome trip, and I hope everyone enjoys their weekend. Bye, Steve.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.